Welcome to Charts Today. My name's David Linton, and today's edition for Friday, the 4th of September, comes to you from London. And the big news is that the Nasdaq fell by 5% last night. The S&P 500 down by 3.5%. So we'll take a look at that in a minute and what it means for the market. And of course, we're at a shortened week this week in the UK because we had Bank Holiday Monday this week, and it's Labor Day on Monday in the US, the classic saying, sell in May and go away and come back at Labor Day. It hasn't paid this year though, because stocks have done very well in the last few months. So first of all, the dollar is holding its ground. It rose at the start of the week. Remembering this is my long term, my medium term and my short term view, weekly, daily and 60 minutes, and so we just go through the list. This data coming from Thomson Reuters icon, Refinitiv icon, or if you're running Metastock. And of course with Updata we're compatible with dozens of different data feeds, so you can feed lots of different data sources into your system. So the euro's weakened against that stronger dollar this week, sitting at 118.70, just couldn't get above the 120 level, but we do still have upside targets here on that short-term chart, so it's not over yet. We do have a new downside target not yet activated. Sterling sitting at 133.09 this morning, so just weakened a little bit against the dollar this week, that stronger dollar being key, and against the euro we're sitting at 112.20 at the moment, so just starting to see sterling improving a little bit against the euro there, just trending up over the last few weeks. Still long-term bearish, short-term is actually just holding on to its bull trend, and we've got some upside targets, so sterling seems to have the upper hand at the moment. Bitcoin sitting at $10,400, so that fell heavily yesterday, down nearly $1,000, so we've seen a big candle this week to the downside for Bitcoin, so not a great week for Bitcoin, and there we see short term we're below the cloud. A new downside target, some 13% lower if we make new lows. That's the key. The selling thrust that's generated is the key, and that's what we'll start to see now on stocks. So we see the S&P 500 index came back to find support on the 60-minute cloud. We are only where we were last week. This is the big breakout candle here on the weekly cloud chart, so we really have only just retraced a little bit of last week's move, so it's not that serious yet. We saw the big run up there. We've retraced some of that, finding support here, but what will happen of course is we now, if we look at the 60-minute chart, we've got a downside target some 7.6% lower. If we go lower, we then activate that target. So where we bounced yesterday is critical. If we go lower than that, we activate the target. And that's the big thing. Is this a correction or is this a selling move that will be activated? It shows up on the short-term charts first, of course. On the daily chart, we only just see a retracement here. And on the weekly chart, we've on the 1% log scale, we have reversed the column. But for the moment, no downside targets yet. So it's still bullish on that short-term chart. We need really to fall below the lows that we saw yesterday. So today's move will be critical as we go into a long weekend in the US. And if we look at the Nasdaq, of course, we did fall more heavily here, still holding above the cloud on the 60-minute chart. And again, we've got a downside target from that thrust yesterday, some 11% lower. The 1-minute targets yesterday did work quite well on the Nasdaq, and we did have here we saw when the market sold off, we did have these downside targets, which is the level that we actually got to. So you can't ignore that first target. It was activated. That's the level we got to on the day. If you're trading stocks, these 1-minute charts are absolutely essential. So keep an eye on that 1-minute chart. The futures, the Dow was down 2.7%. The futures today, we've got the S&P future up 0.4% and the Nasdaq future down 0.2%. So really quite key there. The VIX volatility leapt yesterday. It was up some 20%, so of course that's bad news for stocks. We've seen the volatility kick back in. It's the biggest week in the vol we've seen for several weeks. We had one back in early June, so we've really leapt back into the 30s, and of course the volatility implies and if we look at the futures market for the vol, we're seeing the next month that vol is actually increasing. So there is more concern in the market. Interesting, the FTSE future has actually recovered a little bit this morning. It fell heavily yesterday, of course, so it's pricing in a little bit of recovery. And the DAX future is up 0.3%. The cash market in Germany is up just under 0.25%, and the CAC Quarante actually doing reasonably well, up 2/3%. So these markets, of course, nowhere near hitting their new highs as we saw in the US. Asia was pretty spooked by it. We see a screen of red in Asia. Japan was down 1%. Of course, Asia closed before the US opened yesterday, so it's got to price this in. Hang Seng was down 1.2%. China was down just under 1%. And the Sensex in India was down over 1%. And the Aussie market down 3%, more aligned with the US, of course. So we saw quite a big fall there in Aussie. We'll take a look at the energy mix in a minute, but looking at gold first of all, we're up slightly this morning, up 0.5%. We're still in bearish territory here, so gold didn't really benefit yesterday. The long-term charts are still very, very bullish. And of course, if we make new highs, we activate this target to 3,000. We've got targets going to the moon with gold, so it's quite key. If we make new highs, that's going to be incredible for gold. Silver sitting at 26.87. So we are just, again, a very similar picture on precious metals. Still short-term bearish, but the long-term chart's looking very strong indeed. US 10-year yields were actually steady yesterday, despite all the moves in stocks. So we're sitting at around 2/3%. We've just gradually declined from around 0.75% to 2/3% over the last week. Taking a look at some of the tech stocks individually, Apple, we had big falls yesterday. That's obviously the split there. We've got Amazon falling away as well. The chart still looks amazing on the long term, so it's really just a blip at the moment. We can't take anything from this. Watch for these downside targets being activated, of course. Alphabet was down, and Microsoft was down some 6% at one point yesterday. But finding support on the cloud, and there's lots of support lines running back through the charts, so it's quite key there. Taking a look at the energy mix now, we've not fared too badly this morning. We've got Brent crude sitting at $44. The last couple of days we're seeing quite a strong sell-off in Brent crude, but we are now recovering. We are below the cloud on the 60-minute chart, which does put us in a bearish frame of mind. The downside target was met here. We've got an upside target now building, and on the 1-minute chart we've got a target back to 45.90. Brent crude is really sticking to this $45 level in recent weeks like glue. We've just rolled over, and the big question is, are we going to roll over as at the top, or is it going to be a continuation pattern where we break out and run higher? We're just still playing a guessing game there. If we look at WTI, the 42 mark is the level here, so that's quite key, of course. So for WTI, that's the level that we're looking at there, and we're just seeing again a similar recovery, 43.15. US nat gas sitting at around $2.50. We did have downside targets lower here. Into the 240s and 230s. We are short-term bearish, but the long-term chart is still looking very bullish. Got targets into the 270s here. So for the moment, that's a bullish chart on the daily. Just short-term bearishness creeping in this week. Coal actually recovered somewhat last week, but we are just seeing a little bit of a reactive move back. But it was just sitting in those mid-50s. Emissions had a pretty strong recovery in August, and we did nudge that €30 mark. We've come back. We're finding support on the 60-minute chart. Don't be surprised next week to see emissions breaking above the 30. We don't really have any clear targets there. We've got one at 30.68, so just keep an eye on that. And the longer-term charts, we still do have targets into the mid-30s. 29.65, don't be surprised to see resistance at around 30. NBP is up quite sharply this week. We were bullish at the start of the week on NBP. The recovery continues for European gas. TTF front month is sitting at 287. And if we look at winter gas, we're up 2% this morning. So we've really shrugged off any bearish sentiment in the markets there. German power sitting at 42.65, not quite getting back to the highs that we saw, but we do have lots of upside targets. It's still a bullish chart on both time frames, so looking better there. That's it for today. US market open is going to be pretty key. Keep an eye on those futures and watch the 1-minute charts. Don't be surprised to see some closing out of positions ahead of the long weekend in the US. That's it for now. Until Monday, happy charting. See you then.